Hello and welcome to BQ Prime. I'm Hiral Dadia. Joining us on the show today is Mayuresh Joshi. Whether it's going to be sustainable or not is something we need to wait and watch. But a lot of movers and shakers in trade. To start off with, firstly, let's discuss a Maruti. The stock is up in trade in today's session. You have the parent company which has gone ahead and increased, stake marginally as well, and you have brokerage upgrades that are coming in. Overall, what do you make of Maruti?
Morning, Hiral. So two aspects. One, I think in terms of the demand outlook itself, whether you look at Maruti or the SUV part when it comes to M&M, that part of the segment is extremely strong in terms of the order backlog. The semiconductor issue is largely behind most auto companies. And being commodity consumers with commodity cost deflating at this point of time, the expansion of margin going in elevated levels over the next few quarters probably seems to be a base case scenario in terms of the earnings outlook. As far as the price strength is concerned, which you also closely monitor on the O'Neill lens, I think that has been lagging a tad bit. Obviously, the kind of capex that Maruti is expected to do for rolling out its EV variants in the next few quarters, that's going to be a very key factor going forward. So most of the things falling in place for auto companies, including the likes of Maruti. But on the O'Neill lens, it falls a little bit short in terms of its price range. So I think a little bit more price strength on the current levels will give confidence for investors.
Right. So that's with regards to Maruti. Interestingly, you have paint companies also which are in focus, and overall that's, an impact in terms of the way crude actually dipped in yesterday's session, though we've seen a bounce back that has come in. And that's mainly on the back of the stronger OPEC outlook for China. However, you also have the Saudi-Iranian diplomatic deal which is on the offing, which probably could actually bring down oil prices. So overall, taking the way crude has been moving right now, you have seen Asian Paints, which is the top gainer in today's session. And the anticipation is that the fourth quarter will be better from a demand perspective because volumes were really low in for an Asian Paints in the third quarter. What's your view on an Asian Paints and the paint companies overall?
So Hiral, both in terms of paint stocks, the supply factors and demand factors itself, when you probably look at the supply factors, derivatives coming off, titanium dioxide prices coming off, very positive sign because they can build up new inventory at a far lower cost, which means that the margins can probably stabilize or even expand from the current level. They have taken price hikes in the past, which probably means that there might be price cuts to proper demand because volume degrowth was something that was very surprising in the quarter gone by. Now, when it comes to the demand factors, obviously, I think real estate as a sector is a very key component for paint stocks. The unsold inventory is piling up. At the same time, when you're probably looking at rural and semi-urban demand, because of inflationary factors, demand had been pushed back by a quarter or two. God forbid, I think if the El Nino conditions worsen off and if demand goes off, I think the recovery that you're probably speaking about can get delayed to the second half of this financial year. So waiting and watching for numbers to come through at this point.
You're right. Moving on, you have a Ramakrishna Forgings as well as a Titagarh Wagon. Both the counters are up in trade. Railway has been in focus. Forging companies have been in focus as well. And now they've emerged as the lowest bidder, for manufacturing and supply of forged wheels under the Atmanirbhar Bharat initiative of the Ministry of Railways. Total quantity is around 15.4 lakh wheels over a period of 20 years. The value of the contract is not known yet. Overall, would you recommend buy at current levels with the Ramakrishna Forgings and Titagarh taking the kind of moves that we've seen?
So both the counters, Hiral, are surprisingly very strong movers, even in a weak market. And consistently over the past few weeks as well. Having said that, they trade above pivot levels on the O'Neill methodology, and therefore I think the momentum can very well continue. The order win that you spoke about for both these players, it adds substantially in terms of revenue visibility. For Ramakrishna Forgings itself, the management is very, very hopeful of maintaining the 20 to 22% margin band, looking at a 5,000 crore revenue target, which is quite a possibility by FY25 as execution starts taking place and being net debt free as well. For Titagarh Wagons, I think this is the second big order after the order with GAIL that they'd won in consortium for railways as well. They're already executing almost 24,000 wagons itself. You're probably looking at 250 to 300 coaches being built at their factory. They're doing almost 700 crores in terms of capex. EBITDA margins inching up, return on capital employed inching up over the past few quarters. And therefore, I think as execution improves and with revenue visibility and top line and volume growth coming through, with commodity prices coming off, I think the momentum can very well continue for both these counters, trading above key level as I said on the OE.
Right. Moving on, in terms of another counter from the IT space is a KPIT Technologies. Now that's going to be an interesting play as well. We have Tata Technologies, which will be coming out with the IPO, which are exactly like to like peers. The stock in terms of KPIT, from a 1 year perspective, good moves coming in. 43-45% is the kind of returns, but it's been pretty muted in the last 1 month. Today, the stock is doing pretty well on the back of the announcement that they have made that they're looking to accelerate Honda's transformation towards a software-defined mobility. And overall, that's probably something which will help them increase business as well. What's your view on the KPIT Technologies, number one, and taking the entire mid-cap IT companies downtick into consideration, how would you view this stock?
So for KPIT in particular, Hiral, KPIT along with Tata LXI, I think one of the few players in niche areas like ER&D when it comes to the auto space as a whole. With the kind of new contract wins that KPIT has been consistently doing for the past few quarters and the management sounding very, very confident in terms of constant currency growth, the kind of accelerated investments that are going into electric mobility globally, European region has been surprisingly soft for a lot of IT companies, but a lot of spend is going here in North America and the India market as well, which probably should hold good in terms of order wins and therefore able to maintain their margins as well. When it comes to the valuation stack, obviously I think a little bit on the higher side when you compare its mean and mean averages, and therefore I think on the only lens, a late stage base, an ideal way to play this will be wait for corrections. And for the mid-cap IT space as a whole, because I think most of the stocks are in late-stage basis, with the kind of forced slowdown that you're seeing, maybe order wins start coming off, you're seeing some trickle effect coming through for regional banks, which can also have a say in terms of how order wins will come through for BFSI ancillary sectors as well. So we are maintaining a stance where we either wait for a correction to come through for these stocks and then probably look at the good stages being built and then enter selectively over the next couple of months.
Right. So wait for a correction to enter, to make fresh entries in counters like KPIT and other mid-cap IT players as well. Moving on, Bharti Airtel, Mayuresh, is a pretty interesting play because over the week and towards the end of last week, we did see a lot of brokerage rates that did come in with positive commentary again, towards Bharti Airtel. And now you have Reliance Jio, which has come in and they are undercutting Airtel offerings with new postpaid family plans. Now, if you see the stock as well, today under pressure, one of the top losers on Nifty 50. What do you make of this entire telecom saga in terms of, the pricing war? And how would you look at a Bharti Airtel?
So very frankly, I think even if Vodafone Idea stays in the fray, I think it's still a 2G enabled network and they'll have to do accelerated investments in 4G. Bharti and Jio have gone way ahead and doing far accelerated investment in the entire 5G infrastructure ecosystem. Having said that, I think the ARPU increase is zero and rates for you, me and the general user are definitely going to go higher in the next few quarters. And they are going to maintain that trend going forward. So in my opinion, again, I think ARPU increases are given for the next few quarters, supporting EBITDA and supporting the capex requirements that are given. With the fall that you probably see today, a little bit surprising because this is the third attempt that Jio has probably done. They did one in 2018, 2020, and right now as well. So I think it would not create a substantial impact in terms of the postpaid users for Bharti Airtel in general. But in my opinion, I think ARPU increases are given for the sector as a whole, and that should reflect positively in the coming quarters. But let's see, I think, how and when these price increases.
Right. But do you think, Mayuresh, from a data perspective, if you see the pricing, what a Jio is now offering at $399 is way higher versus a Bharti, because the same is what is being offered by a Bharti at $499. And similarly, if you see the price trend, do you think the key monitorable from here on will be the monthly telecom data? Because there is a possibility that we could see movement happening from, for subscribers from an Airtel to Geo, and that will probably give us a trend, because if that movement does not happen, it's a status quo.
So I'm sticking my neck out here. I think for a postpaid subscriber, I think it becomes very difficult to change users. Trust me, I've been using a particular network, I don't want to name that, for a number of years in spite of price cuts, price increases, so on. So I think the postpaid user is extremely sticky. The telecom companies probably know that, and they do not get swayed by offers in terms of what is on the table at that point of time. Some offers will come through in terms of content offerings. I'm pretty sure about that, what market gave as well. But the general trend is that there is very little churn that happens in the postpaid subscribers.
Right. Moving on, NBCC is in focus as well on the back of an order win. The stock today is up around 2.5%. And vitally, if you see 2023 has not really augured well for this counter. What's your view? Do you think the entry levels from here on? Because there has been a good correction from levels of around 43, 44, which was its 52-week high.
So from a price perspective, it looks very attractive, but from an execution perspective, I think NBCC has always disappointed. When you look at numbers, then you'll probably get the feel. With the humongous order book that it is probably not at this point of time, they probably operate on a okay sort of a margin for the kind of business that they are in, and therefore execution becomes paramount. The moment you have delayed executions, you've got cost overruns, and therefore margins probably remain muted over a longer period of time, and that's precisely what has happened with NBCC as well. So therefore, I think it's a way too much. There are far better stories in the infrastructure space.
Right. And simultaneously, from the same space, if you see a PNC, they've bid for a 1260 crore highway project. The stock is up in trade. In fact, you can call it a multi-bagger as well, because the kind of returns it's given in the last 7 to 8 years, over 250% is what we've seen. And you have brokerages which are seeing a good 30 to 40% upside on this counter. What do you make of this mid-cap major?
A very strong order book. Before the recent order of 2,000 odd crores, they already had a 17,800 crore order book. If you map and peg their annualized earnings for this year, assuming that the year come around 6,500 odd crores, that's still a 3 times revenue visibility. Margins have held on pretty well in spite of a very tough environment that they had to operate out of, almost 13.6% for 9 months, if I'm not mistaken. And therefore, I think the kind of mix that they've probably got, EPC orders around 60%, waters, canals around 30% of the overall order book, equity infusion of almost 1,200 crores over the next 2 to 3 years, makes it a very, very strong contender as far as balance sheet dynamics are concerned. Again, trades above pivot levels on O'Neill. So yeah, the momentum can very well.
Right. And lastly, one stock that we need to discuss is a Railtel. Now again, railway has been in focus pre-budget, post-budget. Order pipeline has been pretty strong for the railway companies as well. However, if you see a Railtel, it's been a pretty volatile ride. Last 1 month, very somber. YTD, it's lost around 15% now. Currently, we have an order win that's on the cards. What do you make of this counter? A 288 crore order from CDAC. Do you think good levels to enter, or do you think it's an avoid?
So we will wait. I think 2 things. One, I think generally railway companies have got a very decent order book at this point of time. Take an example, its counterpart RVNL, very strong contender. It's also one of the L2 bidders as far as Vande Bharat Trains is concerned. And therefore, I think order book itself is not an issue at all for these companies. The only issue is in terms of execution and the receivable days that they probably have on their books. So if you balance this out, and if the numbers probably justify that they're executing it well, along with a reasonable working capital situation as well, the markets will then start re-rating it as well. There was a phase when these stocks got re-rated, but valuations have caught up with them.
Right, so that's with regards to our Railtel. So overall, a lot of movers and shakers that we are seeing. Thank you, Mayuresh, so much for joining us on the show and giving our viewers a detail of what they should be doing with these counters, whether they are buying opportunities or opportunities to avoid completely. Thank you, stay safe, and speak to you soon again.
Thank you for the time.